Good morning. This is Bakes, Kevin Baker with Bakes Takes. Welcome to the show. It is Sunday. We're doing this in the morning, September 19th. Hope you had a great week. And let's get right into this. Why do I do this? My sons, Bobby and Jack, they're 24 and 23. They were in undergraduate business programs, and they would call and ask me questions. Why would they ask me questions? They know that I was a stockbroker during the 87 crash and have been 25 plus years, I can't believe I'm saying that, in hedge funds, mutual funds, institutional firms. I've gone long and short. I've been in every industry sector. Every market cap. I kind of know where the bodies are buried, folks. And I found out after the 87 crash that charts work, and I learned technical analysis to find better ways to get in and out of different stocks. I do a lot of fundamental work, always have. I simply do the chart work first and the fundamental second. It just works for me. You be the judge. I read the Wall Street Journal, Barron's, The Economist. I listen to dozens of podcasts. I devour dozens of newsletters. I monitor what my Google alerts bring. And I point you to those, give attribution, put them in the show notes. But know that if you don't want to do that, I'm doing it for you. I eat home cooking. All I do is talk about what my boys and I are investing in and interested in. I have no conflicts. Tell me what your pain points are, problems you'd like solved, topics I should cover. And thank you very much. Thank you especially Charlie, Justin, and Murph from getting this Luddite out of the gates. We're going to be launching a premium version soon, Bakes Takes Plus. A weekly call with me on Discord. I'll teach technical analysis, especially using your stocks and your ETFs that are in your accounts. You help me design the show. Tell me guests I should reach out to. We are hopefully going to be speaking with Gus Christensen from Share Scoops pretty soon, and Tim Rotolo from URNM. So we'll get some exciting things going on. Would you like a text that like I send to my sons whenever I'm doing a trade? 610-331-4283. Fire away. This is not investment advice. Here's my disclaimer. Please conduct and share your own due diligence. This kind of segue, this is from fan mail, and this is a text I got from Joe in Rhode Island. We'll segue into my themes and groups because this is germane. But he asked about uranium, and uranium has gone, vertical here. And Joe, just to get to the chase, I'll go into some more detail. But for right now, I think you should own some. And we had a pullback on Friday, and maybe half your position, maybe 5% of your portfolio, something like that. Keep dry powder. And right now we're at $86, just so we're clear. And I'll go into all the charts in a minute. But if you see it come down to 79 and 71, two different support points that were prior breakout points, then I would step up. But I wouldn't be too cute. I just think you have to own it. I think we're in inning 4, and I think we could go to extra innings. Spot has gone from 30 to 50, and we've made this kind of money. And the old high, for reference, is 140 for spot. And I think we get there over time. So own some, and then be ready to buy if you see 79 or 71. And this is a good example for Bakes Takes. I mean, I'll monitor your stocks and ETFs as well as mine and alert you to buy and sell points. And I've got a good eye for this after all these years, and I hope it's helpful. So share this with your friends, please. Reddit friends, Robinhood friends, and I'll offer strategy for those, and fire away stocks that are problem children that you think I could be helpful with. Anyway, my themes and groups. And I know this is kind of becoming the uranium show, but it also it brings up a great point, is that if you let your winners run, you can make a lot of mistakes and still make a lot of money. And so when you get something right, stay with it and don't be so skittish. This is the North Shore Global Uranium Fund, URNM, and here we are at $86. Now, the reason I bring it up, it's down Friday, and it was down Friday, pretty hard, down 15% at one point, finished up down 10, and I don't care. Yes, the volume was heavy, it picked up, but we're in at $30 back in July. 30 to 86. I wish I had 100 of these. We doubled in a month. We went from 50 to 100 in a month. That just doesn't happen that much. Doubling your money in a month. That's kind of like, Bitcoin kind of action. So we're down 10% on Friday, and it's kind of standard stuff. Now, here's a little bit of nuance for you. If you go to the red arrows, and please go to my YouTube channel, you see the volume that I have here and the decline. We closed well above the low and well above the previous breakout point. So it suggests to me that over the course of the day, yes, you had some selling, but there were some folks that wanted to buy from 3 p.m. to 4 p.m. to close out the weekend. So let's go to the next chart, Mike, please. And I almost couldn't believe that this is from a week ago. So here, it's the original breakout to get to that 100 level, 84.71. The trend is up. My thesis is intact. Please let your winners run, and please cut your losses. This is the kind of action that we're seeing here. All right, and then here's the weekly chart, longer term, and I showed here the buy back in July on the then big increase in volume, the run to the highs at 71, and this blast through it, which was really distinctive. Take a look at this, 74.95. It just took off. And please note the pattern. You build a base, you explode into new highs on big volume, and then you do it again. And we're doing it here at this level. That was an all-time high on a 548% increase in volume. That's about as pretty as it gets in the chart world. So so far, uranium, we're up 70. It's more than a double from the start of the year. We're up. It's close to a triple since inception. We've gone from 42.90 to 86.31. And all this week, CNBC was talking about Apple and new screens on the 13. And, we find unique opportunities. We look places where other people are not. Please see my Twitter, my YouTube, my other social media, especially with uranium, where I have laid out with timestamps the process, the original buy, and what I've encountered since then in my work and in my research. And I can't be more transparent. I showed the 10 reasons why we bought it, and then additional incremental bullish information. And I'm looking for bearish information too, but this is where we are right now. And I just brought this up because John Quakes, at Quakes99 on Twitter, brought up uranium, and this narrative was that this is Reddit Wall Street Bets, GameStop kind of stuff. And I'm on Wall Street Bets all the time. Before this big move, no one on Wall Street Bets was talking about it hardly. I couldn't even find it most days. So I don't buy that rationale that this is just short-term money, dumb money coming in. I don't buy it. And I said that on Twitter last week that they weren't there prior to this big move. So that's uranium. And Joe, Rhode Island, I hope that I've been helpful with that. And please tell me if I need to clarify. Text me anytime you want. Next in the portfolio is Global X Copper Miners, COPX. We closed below the 200-day, and I sold a third. And here we are now where it looks like copper's rolling over. We're seeing the second part of the sell discipline, the 50-day coming through the 200. It's threatening to do that. Looks like it wants to, and I'm going to sell another third. And for new subscribers and people that are thinking about Bakes Takes Plus, I'm going to add a lot of value because I know how to sell stocks. And there are very few people that have an overt, predetermined sell discipline to get out of stocks as best as you can. And I've done it, I've shown it, I've demonstrated it, and I want to do it for you so that you don't have a lot of red on your screen and you don't have stocks that go down 80% and take away from the winners that you have, like URNM. Next, ProShares Short MSCI Emerging Growth. We own this, and it is very promising to me. Look at the volume picking up here. And I'm just kind of putting all these things together. And this is from going through 1,700 charts every month. But the fact that I'm 35% in cash, I'm 20% short, I'm 25% uranium. Your Merrill Lynch broker is not going to tell you how to do that. And your Robinhood friends probably aren't there either. It's just flat out working. But the fact that the market is telling me that these shorts are perking up in emerging markets, copper, which is the best economist out there, is weakening. It gives me some caution. So that gets me to my next chart, which is the SPY, the S&P 500, the ETF. And this is with the backdrop of a number of Wall Street firms saying, oh, it's September, and bad things happen in September, and crashes happen in October, so get ready for the correction. The drumbeat is so loud, I almost don't think it's going to happen like that. But, it is weakening. You're seeing the SPY close at 441 below the 50-day moving average. It is not as important as the 200-day, but it just shows, and the volume's picking up. Now, Friday was triple witch, so that makes the volume go up too. It isn't as important as the 200-day, which is now at 409, give or take. But it's a 65 increase in volume, and it's just cautionary that things are weakening, and we want to be alert to that. I think we're very well positioned, but I want you to be positioned too. So that's why I bring it up. All right, so my take is own some uranium here. I'll alert you to the dips. 79 and 71 are my next points. I think dips in the rest of the market are more likely, given what we're seeing in copper and the short emerging markets fund and elsewhere. It's just we're getting tired. So stay tuned, and I hope to add value as you go forward. My next segment is Gray Swan, and this is a little tongue-in-cheek. It's a serious subject, but a black swan is something like COVID. Comes out of left field, hardly anybody's talking about it, and just wallops people. This is a gray swan that is, I kind of say, this is out of The Guardian, for example, this article. It's not going to be on page 2 or 3 of the Wall Street Journal anytime soon, I don't think. But this is just a fact from The Guardian. China sends 19 aircraft into Taiwan's air defense zone. And there's been tension between China and Taiwan for a long time. It is not getting talked about a lot. I've mentioned this, and I've mentioned the resistance that is growing to the way they're oppressing people in Hong Kong. And I think that if this turns into military engagement, active fighting, or warfare, then that is going to be a surprise to many investors where the risk premium has to go up. And so I just want you to hear about it here so that you're not completely blindsided. And then also from my chart work this past month is Taiwan Semiconductor, TSM. And this is what they call a death cross, which is a little extreme. It's a stock, it isn't a life. But the 50-day coming down through the 200 is a bad sign. It could be resolved to the upside. Most of the time they're resolved to the downside. And is it a coincidence that this is looking so bad in the face of the China antagonism? And so, especially this is a semiconductor company, chip shortage, they're raising prices, but the stock's rolling over. It's just something that gives me some pause, and I think it should give you some pause. And for my Chinese subscribers or my Taiwanese subscribers, please weigh in. What are you seeing on the ground? Any links you can send? I'm a sponge, and I'd like to be even better informed. Next is Reporters of the Week, and this is from Fast Money on the 16th. At 33 minutes, Melissa Lee, the CNBC anchor for Fast Money, the headline here is Gauging Uranium's Bull Run with Global X's Rohan Reddy. And this is the first time I've seen them discuss this. And Guy Adami chimed in, who I like a great deal. That Karen Fireman, another lady there, was talking about uranium. But it's the first time CNBC has mentioned it. And again, we mentioned it back in June, July of last year. So please stay tuned to this channel, and I hope to be adding more down the road. So I'm sorry, this is my take. I'm sorry I pound URN so hard, but please note the methodology, the logic, the timestamps that lead to these gains, and judge for yourself if you think it's worthwhile to pay attention to what I do here and we do here. Charts, tweets, and posts of the week. This is John Quakes again, at Quakes99, and points to the Bear Traps report from Larry McDonald, which I reference here a great deal, and talking about the squeeze in the market, the breaking out to the upside of uranium, and it's finally playing catch up with the stock. So the metal is gone from roughly 30 to 50, and he sees from here 200 to 300% upside in the uranium names versus 20 to 30% downside. I agree with him. I think, frankly, the upside might be greater, but stay tuned, and I recommend both John and Larry's work. I think they're fantastic. Yellowbull at Yellowbull11 tweeted out that even with this big move, this is $30 billion. I mean, Apple could buy every stock out there in an afternoon. It's a relatively tiny amount, and the potential capital that can come in here via hedge funds, via ESG-focused funds, and I'm going to talk about that with Gus from Share Scoops, and retail is incredible. I think that if you're ESG focused, you have to consider uranium. It is just good for the planet and good for your wallet, and both of those bring a smile to my face and a tear to my eye. So I hope I've been strident enough there. And gold still stinks, and I said that very forcefully in a recent in response to a recent question from a subscriber. GLD, this is the Spider Gold Shares ETF, which is monstrous. But it was a huge gap down on Thursday and finished in the red on Friday. And just I'm going to take the chart books over the textbooks here. The textbook would tell you the Fed is printing money like crazy, and inflation is going higher, and we ought to be seeing $2,000 plus gold, and gold doesn't care. And so it isn't. I'm going to go by with what the market is, not what I think the market should be, and I'm going to avoid gold, and I think you should too. And I hope I have some Japanese subscribers that through the chart work this week. This is the MSCI Japan ETF from Ishares, which is the large cap Japanese stocks. And something's going on here to the positive. It's picking up. We hit a recent new high. The volume is increasing. I'm doing more work here, and I'd love your help from Japan. To my subscribers there, you can tell me what you're seeing. And then Wisdomtree, is their small cap dividend ETF is acting very much the same. So something good is going on in Japan. I don't know. I don't have a fully formed thesis at this point, and I'd love your help for me to form one. But I want you to keep this on your radar screen as we progress. So my take is. The individual investor has a huge advantage, and I don't think that most of you realize it. If you're running a mutual fund or a big institutional portfolio, you have to pay attention to an index. You have to be fully invested. You have to answer to committees, which influences your thinking. You have liquidity restrictions, turnover restrictions. You don't have any of that, and you just want to make money. I just want to make money. And I'm working hard to help you build your hedge fund and make money every year, even when the overall market declines. And most of you haven't seen a market decline. It's been up and to the right for 10 years. And I know that sounds audacious to make money when the market's down, but that's what I'm trying to do. And please come along for the ride. So that's the show, folks. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts that I reference are on the screen. Follow us on Twitter at BakesTakes_ and other social media. Please use your voice memo app tape your questions and email to bakes@bakestakespodcast.com, or write in if you prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Thank you as always, especially for moving the times around. Have a great week. This is Bakes. And for my Beacon segment, I hope you saw this. It's got 3 million plus views. This is the Foo Fighters playing Everlong, and 11-year-old Nandi Bushell is I believe, British, challenged Dave Grohl to a drum battle. He says he lost, and it in the middle of the pandemic. It was, one of the positive things you could hold on to out there. Well, she comes on stage at the Forum in Los Angeles, plays with the whole band, kills it, and just the sheer joy on both Grohl's and Nandi's face is textbook. So click on the link. It's 7 or 8 minutes, and it's worth your time in my view. And for much needed levity, comedians in cars getting coffee, Jerry Seinfeld. It might have been on 10 years ago, and I just discovered it. I'm binge watching it like crazy. And the episode that I have here is with Carl Reiner and Mel Brooks, that are legends. And I just think you'll get a kick out of it. So I'll see you soon, folks. Take care. Bye now.